This is two funds where each serves a purpose. It takes your assets under management to $15 billion. And I mean this, Justin, with respect. Your firm's gone a little under the radar. And now here you are, arriving at this moment.
I mean, I think we've just been focused on investing. So maybe I think within the venture ecosystem, people know us.
I want to talk about one of the funds in particular. I find this very interesting. The idea of some of the capital is that you offer liquidity, right, to founders that you back, their employees, in different forms. Why specifically earmark some money for that?
So if you kind of rewind the clock, right, we started the firm about 16 years ago, and our thesis was that companies were going to stay private longer. And the challenge of companies staying private longer was going to be that founders, executives, employees were going to need liquidity.
Like working capital.
I mean, look, if you start a company when you're 25 and then you end up being 35, right? Like your life is different. Maybe you want to buy a house, right? In the same way, like all these companies need more growth capital, right? And so we've seen the availability of that expand in the private markets. And so, our general view is if companies stay private longer, there are going to be more opportunities to invest in them.
And opportunities, boy, did you take. You first invested in SpaceX, for example, in 2010. You've written 24 checks, Ed tells me, into SpaceX since. How much now do you own of SpaceX, if you're able to do that?
I mean, I think at this point I think we own well over $10 billion. So it's a pretty big position for us. And we've had a lot of conviction in the business over the last, 15, 16 years. So yeah, we're excited.
I mean, if you were in 2010, what sort of returns can the LPs be expecting on this?
Oh gosh, some of those investments I think are probably like 100x investments at this point.
It's interesting, $10 billion of position in SpaceX, I think would be around 1% of the company.
Yeah.
But you've got a decision to make. So if we're right, and Bloomberg's reporting that
Bloomberg is always right.
Bloomberg is very often right. But we're reporting that SpaceX, goes public in late June at a valuation of up to $2 trillion, whatever it ends up raising, $75 billion. You keep talking about the whole point of the firm is to invest in companies over that longer time horizon. In that case, companies were staying private longer.
Yep.
What do you do for your LPs or for your firm in an IPO scenario? Do you stick with it, or what's the strategy?
I mean, I think the exciting part about SpaceX is like the next 20 years of the business. And so I agree with your question. I think it's a hard decision. Ultimately, let's see where we get to, right? We'll find out what the company price is at. As you know, these things tend to happen the night before, right? So I think there's a lot of information between now and when the IPO happens. And I think we're going to be happy with all outcomes, but we're sort of excited for the next couple of decades.
I wanted to look backward a little bit. The first investment around 2010, you had already had a history of SpaceX from your time at Founders Fund. But if you did do 24 checks over 15, 16 years, what was that like? We make a lot on this program of Google and Fidelity, Founders Fund coming in these bigger rounds, but you were able to participate.
I mean, I think really the thing that we did is consistency, right? We were excited about the business. We had conviction about the business. And so we kept investing, right? And some people wrote it one check, and that obviously was a huge outcome. But we kind of showed we showed up year in, year out. And that's really paid off.
And now new people show up. SPVs,
sure.
Access to retail. Is that what naturally has to happen if we're going to get these companies staying private longer? What's the tension there?
I mean, once the company's public, obviously, everyone will have an opportunity to invest in it. I think, as we've seen more capital become available in the private markets, I mean, you've seen, some of the large crossover funds get involved. So, I mean, there's an incredible increase in the amount of capital available in the private markets relative to, 10 or 15 years ago. And so, I do think some of these things are sort of the natural evolution of the private markets.
Well, on SPVs, sorry, Kara, I just wanted, I want to get an answer to your question, because on the show we talked a lot about claimed ownership of companies. SpaceX is a prime example, but Anderil's talks about this as well.
Yeah.
There are people out there purporting to have a position, but they bought in through some SPV structure ahead of an IPO. What's the reality of that? What happens when the real ownership becomes clear?
Well, I mean, I think the greater concern is just fraud in the private markets, right? And so just because people There's clearly been fraud in the SpaceX market, in the Anduril market, so I think that people need to be thoughtful about who they're partnering with and who they're doing business with, because I think we'll find out, I don't know, a year after the IPO, when people think they're getting shares and they don't get them, right? What actually happened?
That's because of a lockup period.
There'll be some kind of lockup period or whatever, but I just think it takes a while for people to actually start demanding the shares that they thought they owned, and I think that's going to be an unfortunate consequence of some number of bad actors in the market.